discussed in those trainings, it is one way or the other going to be discussed in the trainings at 9 a.m., either by Coach MRD or by myself, as regards to the concepts that are shared during those hours. So you shouldn't be so worried about it that you've missed the training at 7 or 6. That is, if you can't make it there. Of course, when you make it, you'll get the different touch of whoever is training there. But the content is always going to be shared. That is, if you can't make it.
Okay, thank you very much. Thank you.
Yeah. Yes, Adam. Adam, you have something to say? Okay. It was right. Anyone else? One last person?
I think I'm done with the question Madam BC asked, so I'm okay, sir. We go as your schedules.
Okay.
Thank you, sir.
Okay. Anyone else with a query? Burning query? Could be about anything as long as it's to do with crypto trading. Seems no one else has a query. Okay. Let me just get my application set here, and we can start off. All right, good morning once again. We're going to start off with our overview. And like I said, and I usually say, we're going to use CoinMarketCap is an aggregator. Aggregators are basically data collection systems that collect different data about the crypto market from different assets, and they put it in the same place so that you can consume it and utilize it in whichever way that you need to. Okay, those are data aggregators. And we said we have CoinMarketCap. We also have CoinGecko. For my preference, I go with CoinMarketCap, but they do the same thing. So, overview about the crypto market. Currently, we are seeing the market is pretty much neutral in form of how it moved between yesterday and today. Pretty much neutral, but we want to first look at the market capitalization. Of course, we are seeing a small rise in the market capitalization compared from the previous week. We are seeing the out-season indexes indicating Bitcoin season. Yeah, we are way back into the 22 out of 100. So basically, that means there is a significant weakness in the market, and very, very certain consolidation in the market. We are not seeing a lot of activity to the bullish side. Generally, the market is slightly bearish, so we don't see so much activity in the altcoins. And when we look at the dominance, like we talked about last week, the dominance is at 59.76%. Given that basically means a lot of the money in the market, that is a lot of the market capitalization, that is the total amount of money invested in cryptos, is lying in Bitcoin. That's what it means to have a Bitcoin dominance as high as 59%. That means 59% takes the largest share of all the market capitalization, the entire crypto market. Yeah, that's what we see. And when you look at this market capitalization, of course, we've seen the market drop in these few days. We've seen the market capitalization has been dropping. That means a lot of selling pressure has been happening across various cryptocurrencies. When you look at ETFs, I told you that ETFs, since their introduction in 20, led to an area where the big boys buy from and sell from. When we talk about the whales, when we talk about the banks, when we talk about the institutions, their main investment area, or where their capital is felt the most in the crypto market, is in the ETFs. I told you that ETFs are not the way we buy crypto on exchanges. Crypto that is bought through ETFs is bought differently, and it favors the big buyers. It favors the traditional investors, the guys who are investing in gold, in stocks, and all those other things. The guys who don't want to expose themselves so much to crypto risk have a chance to invest in cryptos through what we call the exchange traded funds. Okay, so in institutions, instead of buying Bitcoin directly, they go and they buy a fund that is created by a company, for example, BlackRock. Now, BlackRock, just a simple explanation of how an ETF works is BlackRock goes, it purchases Bitcoin, and then it issues out what we call the ETF, or the exchange traded fund. It is basically taking Bitcoin and issuing it out like a normal stock. Yeah. And and this kind of investment lies within the regulation of other stocks that are already in place. So this attracts big players. This attracts the people with big monies to pour in their money because they trade Bitcoin like they are trading a stock. So when BlackRock buys Bitcoin, let's say it buys 100 BTC, it issues funds that are related, or that are almost relative to what, to the amount of BTC that they hold, and then they sell these funds to large investors, large capital investors. When they buy, then that is what we call the ETF flows. When they make profit, that is, for example, if they bought BTC at 98,000 and BTC rises all the way to 100,000 or 120, they can sell off. Who sells off? BlackRock sells off. So when BlackRock sells off, it basically means the investors have also made money. We can go into the intricacies of how that operates, but that is for a totally different session. But generally, what you need to understand is ETFs kind of try to do what? Other entry point for the biggest investors. Now, when we look at this, one of the things that we can see very clearly here is we have seen large outflows. Okay, we have seen significant outflows from the recent weeks out of ETFs. So when you see this, when these bars are down, basically means there has been a lot of selling pressure. Okay, orange stands for Bitcoin, blue stands for Ethereum. Now, only Ethereum and Bitcoin are the ETFs that are displayed here on CoinMarketCap, because these are the biggest assets on the crypto market. And basically what is happening in both these assets can greatly influence how the entire market in the crypto space acts or reacts. Like we said previously, Bitcoin falls 3%, everything else falls up to 15 to 20%, especially when you go down to the deepest altcoins that you can find. Yeah, Bitcoin rises 5%, and you find altcoins rising 80%, 300%. So a small rise in BTC can affect or influence a mega rise in altcoins. Especially the further you go down into market capitalization, the more swingier it gets, or the bigger the percentages. Yeah, I'm going to just display that shortly after. So when we look here, October 31st, November 5th, we are looking at significant sell-offs, and we are seeing the biggest bars being on BTC. Here we see 2 bars on BTC, we see another significant huge bar on BTC. This explains the downward move in the market from the previous weeks. Yeah, or previous last week and the week before last week. Basically, we've seen the market slightly trending in the downward direction. What does one of the things that can tell us or explain the downward direction in the market is this significant sell-off we've seen, and we have continuously realized significant sell-off in the previous weeks, and that is why we've been having a very sluggish market, ranging in the sideways or simply just dumping. Now, it is important for you to understand the state in which the market is, because when you do, it can help you define how you enter the market in terms of risk. A few weeks ago, I came here and I talked about the different types of risk management that we can deploy when we are trading. I talked about the aggressive type of risk management. I talked about the neutral approach in form of risk management, and I also talked about the conservative approach in risk management. And I said you are going to interplay your risk management according to market conditions. Yeah, the current market conditions that are going on are going to inform you how you approach the market in terms of risk management. Where I said, I gave an example whereby if I had $1,000 to trade, I cannot trade aggressively. I cannot manage my risk aggressively in a sluggish market like this one. Yeah, I'm going to trade conservatively. Why? Because the market is just ranging. It is sideways. It is not trending upwards. That means if I'm going to trade, I'm going to try as much as possible to be conservative. Okay, I'm going to approach my trading conservatively. That means if I have my $1,000, I'm not going to get $500 and try and trade it on a single asset. Yeah, especially if I'm not very, very, very firm with what I am doing. I'm not so sure about what I'm doing. But even if you are, risk management is key for longevity in crypto trading. Regarding of how sure you are, risk management should never leave your fingertips. I'm going to try and trade 800. Where some coins are pumping, some are dumping. There is no clear certain direction of the market. And if there is, it is more on the downside. I'm going to trade, but I'm going to be managing my risk conservatively. Okay, conservatively. And then when good or not good, I'm literally going to be neutral. But then when the market finally decides and it is bullish and it is very clear, I can go aggressive on some assets. You don't have to go aggressive everywhere. You just have to go aggressive on some assets that you're very, very sure. You have to have your certain confirmations. Now, if you're wondering what these confirmations are, these are the things that we learn through the week. Yeah, your entries and how you take them, how you wait for your confirmations, how you analyze the market, and you know that this is a very good entry point, this is a very, very good discount price, and then you know that for sure the market has changed direction and this is a very good discount price. I can enter the market with a little bit more risk, a little bit more aggressive than I usually do. You get it? But how does that come about? When you are able to tell the condition of the market. Just like you wake up in the day and you look at the weather and you're like, this month is a rainy month. You're not going to wear the same way you would in a sunny month. That is the same thing we are talking about here. When you realize that today is going to be a little bit more windier than it usually is, you're going to carry a sweater with you. Today is probably going to be a very sunny day. You're going to carry a bottle of water with you. So you realize that it changes as the weather changes. So that is what we're talking about here. What I am showing you is what we call sentiment analysis. Yeah, how we analyze the sentiment of the market. Is the market bearish? Is the market bullish? On a general perspective. Yeah, on a general perspective, it will help you in defining how you enter the market to survive the market in terms of risk management. Okay, so what we are seeing, this is an explanation of what we've been seeing previously. The market has been really, really tanking. We've seen a huge sell-offs. We've seen coins tanking and dipping, and a very slow market. Some of you have gone into floating loss on some assets. It is okay. It is general. That is the state in which the market is. When it finally recovers, your coin, your money will come back. Yeah. So some of you have a tendency of panicking. I'm seeing my coin, it is dipping. Should I add more money? Blah, 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 all those things. You're not supposed to do all of that. When you understand that it is normal for the market to get into a situation like that, you will definitely know, it's just the time. It's just the sentiment in the market. It goes away. You get it? You're going to panic, try to add more money. When you make a loss in a sluggish market like this one, you're not going to try and trade again and again so that you can make it back. No, you will know, I tried today, the market didn't give me the money, I go away. For example, me personally, in the past few days, I've traded some trades and some of them have given me money, some of them have hit my stop losses, and I took it normal. Why? Because in a sluggish market, usually we say, in a ranging market, a market that does not decide where it's going, whether up or down, yeah, we usually say you try to avoid as much as possible trading that because you think that the coin is going up and then it goes down. You think it's going down and then it goes up. So something like that. So it means that if I one trade and it does not come through, I'm going to try and force it. If I hit my stop losses, I'll chill. If I have to trade 3 to 6 trades a day and I'm beyond the number of trades I have to take a day and I'm not winning any of them, I chill. I wait for a what? For another day. I wait for a better setup, something like that. But one thing to understand, ETFs are basically where the whales are best investing a lot of money, and we can see we have seen massive sell-offs in the previous few weeks consecutively. Okay, we can see this consecutive massive sell-offs in the ETFs. Now you can see the current bar here shows some buying pressure on BTC, and when we look here, the net flow is we've seen 117 million flowing into Bitcoin and just 4 million into Ethereum. That explains the slight recovery that we have seen on the charts. Okay, that comes and explains to us the slight recovery that we have seen on the charts. Now let's go and look at Bitcoin. Which one should we take? Let's take OKX. I hope there is not a lot of analysis here. All right, this is OKX. Okay. So, like I said, now we've looked at the fundamentals or the data from CoinMarketCap. I said I'm going to be taking you through this analysis until all of us are more comfortable with it. That is why these days are not coming through with technical analysis so heavily, because we get so much of that through the week. And we have a lot of reference videos for technical analysis. Okay, so what you see here is at the beginning, at around October, after the crash. You see this crash happened on Friday, 10th of October. Bitcoin went range bound. What I have just drawn is a ranging box where Bitcoin was basically doing what? Was ranging. So Bitcoin staggered within this range for up to the start of November. You see, up to the 3rd of November. Now, immediately after the 3rd of November, Bitcoin broke below the what? The support level. Bitcoin had a significant support level, which is what we call a key support level at 106,400, as you can see there, just so that we can see it. Okay. Now, from this ranging box, of course, I'm not going all the way back into the history, but from this ranging box on BTC, what do we see? We see Bitcoin established a support level here. It went up, it established a resistance. I know those of you who have been studying the morning class, you're now very, very familiar with these things, so much familiar with them. Okay, so it established a resistance here, and then it established a support down here, and then Bitcoin went range bound for a significant number of days. You see that kind of movement that BTC is doing. We can draw a path. Here. Came there, it came down there, came up there, it came down there. That is basically what we call the market is trading sideways. It is in a range. Now, usually in a range, we expect a breakdown or a break up. Okay, what happened on this case? Instead, Bitcoin broke down. Okay, and that's what we see. So we can relate the information we've seen. For example, the ETFs, which we've said are where big whales or the big market makers or the big investors are generally investing most of the money, and how you can tell where they're going. Over time, you will learn how to track, for example, the buys that they have done and the sales they have done. This information helps us understand generally where is the market going. As I trade, where is the market going? Now, when you gather this information, it basically helps you to gauge your risk. Are you going in aggressively? Are you attacking the market conservatively? Is it a time to be super excited about the market, or is it a time to trade cautiously as you wait for significant moves in the market? Always, but it is important for you to understand the state which it is. So we see Bitcoin went range bound here, and then a few days ago, I think, the 2 or 3, it's about 2 days. Today's the 7th, so 2 to 3 days ago, BTC did what? BTC broke down. So we can see that simply explained by a lot of what has been happening previously. Okay, we see this massive here in ETFs significantly match up with this sell-off on what? On BTC. Okay, so what does that tell us? That basically tells us that here Bitcoin broke down on the downside, and this eventually, if you've been tracking Bitcoin, which was in a range after this breakdown, it just market is heavily tells us about how the market is heavily. If I may, with what happened Friday, this was just from the bias. I talked about the daily bias on Friday last week. Now, when you look at this, I told you that the bias was slightly bullish, and you can see a few days after then Bitcoin's higher, but generally the market was bearish, and we can see that was a simple retracement in a continuous downtrend. We could see the massive sell-off. Now, these massive sell-offs are brought by a number of things. Of course, there are fundamental news that explain these big candles. We're seeing a lot of significant momentum candles to the downside. So the massive sell-offs can be explained by a lot of fundamentals that happen. Now, when we go into history, Bitcoin left us a very significant area of interest. Okay, and we come here. This is a very significant area of interest. You can call it a level because it's on a higher time frame, okay, but it's a very significant point of interest. And technically this is what we call a demand level. Yeah, and one thing you should note, demand levels on higher time frames are usually very strong. Why? Because when the market taps into them, it has a tendency of reversing from those areas. Okay, now let us see what is happening. What is happening is the market came and tapped in this demand level the recent time in October 10th, and it bounced back. Okay, so we see that the market tapped here, bounced back, and we are seeing today that the market is tapping in this level once again. Yeah, Bitcoin has come back and is sitting at the same demand. We can see there is a strong support area at 98,200. If BTC breaks the price level of 98,200, we are sure that we are going to see continuous selling momentum. However, between you and I, we can very clearly see that Bitcoin has established a support here. Between you and I, we are seeing Bitcoin has established a support level here on 4 consecutive days. This day it came, it dipped, it came back. This day it dipped again, it came back. This day it dipped, it came back. Today, which is the current candle printing, it started around the same level. So Bitcoin has literally just established a support level at 101,420. Okay, the next level that is really significant will be 98k. If Bitcoin breaks 98,200 and goes below, we might see continuous selling momentum. Okay, continuous selling pressure, and that wouldn't be so good to the crypto market across entirely. Okay, because basically we shall see continuous reds in the market. Okay, continuous red in the market. Now, why do we do analysis and why do we learn these things? We learn them so that we are sure and ready when anything happens in the market. We are sure and ready. We can take a trade, and we can continue. So we can basically be profitable in the market. So when we see generally over a general overview of the market on BTC is showing us the structure in terms of market structure. BTC is showing us significant bearish structure. It is just continuing in the selling momentum. If we were to draw a trend line here, we can draw from the previous high. We can see there is a high down there and then we can see something like that. BTC has sustained its selling pressure. Okay, so if we were to see the breakout of this downward momentum on BTC, we want to see Bitcoin come and trade above our trend line here. Okay, the one that we just established. Let me just make it clearer, something like that. Okay, we want to see significant what? Significant pickup around that. Now, okay, weeks. Okay, let's do that. Let's do that. Yeah, so we would like to see BTC come, and if we can see significant pressure pushing Bitcoin on the upside from this demand level, like we saw it here, if Bitcoin maintains its support on this, that is, the demand level really works out, we get a significant buying pressure. We want to see Bitcoin rise again and break above this trend line. Breaking above this trend line and continuing with higher highs would significantly impact the market to go bullish. Okay, before we can see that, we can anticipate that the market is going to be sluggish, trading sideways. Some coins will pump what? Up and down movement in the market. Okay, now if Bitcoin broke that level, basically what we do is we go down, we go back to history, and that is why analysis is really, really important. We go back to history and we see when it helps us give us an insight generally of how we should try and look at the market. This is a market box. Just a moment. Regaining its strength and continuing in a bullish what? Starting off a bullish move in the market. And when Bitcoin turns bullish, we are going to see many other coins also recover or from the sluggish market that we are seeing. Okay, so this is a significant area. 111,000. It's between $109,000 and $111,000. So we want to see Bitcoin trading above that. And when it goes above that, we want it to go above this resistance of 115. Okay, that will give us the significant recovery that we need from the market. Okay, that will give us a significant recovery that we need from the market. This analysis is not basically for you to enter trades. This analysis is for you to understand what is happening in the market. Okay, all right. But one of the positive things that we have, Bitcoin is sitting within a significant demand area. It was unmitigated. You see this demand area? It is the same demand area where this week came and sat. And the other positive thing is we have established support, strong support for 4 days, significantly for 4 days. And we are seeing some recovery. Yeah, we are seeing a green candle here, significant recovery. Now, what is the daily bias? The daily bias from yesterday, between yesterday and today, that is, when you look at the candle that came before yesterday's candle, this is yesterday's candle, this is Thursday candle. So when you look at Wednesday candle, the bias on Wednesday was the bias was bearish, but then the market came, cleared the low, and it went closed bullish. So basically that gave us a bullish bias for Wednesday. Wednesday came, it failed to take out the low, it also failed to take out the high, but it closed bearish. Okay, so it made basically what we call the inside bar. Being an inside bar on a previous bullish candle is significantly bullish. Yeah, it's significantly bullish, but the strength of that bullishness is not that much, because I want to know that the market is bullish when it gives me a green bar, but it gave us a red bar. Okay, but it is an inside bar. Being an inside bar and it is red, it failed to take out the bearish and it failed to take out the bullish side. It's simply an inside bar. So it gives us that today's candle is considered, or rather today's bias is considered a bullish what? And today's candle either takes out the high or the low. That's when we can have a stronger bias of where the market is going for the following day. But for today, the bias on BTC is bullish. Why? Because we had an inside bar for the Thursday candle. Okay. Secondly, I am bullish on Bitcoin, secondly, because Bitcoin has maintained its position in what? In a significant demand area. If Bitcoin is maintaining its position in a significant demand area, I don't expect Bitcoin to do what? To sell off that much. Okay? To sell off that much. I expect that Bitcoin holds that level. If Bitcoin level and continues downwards, then we are going back to our what? To our bearish what? To our bearish bias in the market. I said, and I'm going to repeat it because we are learning these things many of us for the first time. When the bias is bearish, doesn't mean that coins are not going to come out bullish. Yeah, coins will still come out bullish on certain assets, but those are going to be select assets. Yeah, select assets. But the general bias is bearish. That means if you get the opportunity to trade a bullish coin, trade it as soon as possible and get out. Why? Because that selective bias on that coin is eventually going to wear off, and when it does, the coin is going to dump. I can show you a good example here. Yeah, I'll show you a good example here. You see this coin? It's selectively pumped. It's selectively pumped aggressively. When we measure how much it did for the past 3 days, it selectively pumped. When the market was heavily bearish for it on Sunday and Monday, it was pumping. You get it? The market was bearish, but it was pumping. And guess what it did? It did 800% between Sunday and Monday. Literally 8x, 8 times. Okay? So what am I trying to explain here? What I'm trying to explain, on Monday alone, this coin did 200%. What I'm trying to say here is, even if the bias is bearish, this is why you need to do your analysis. Okay? When you make your analysis and you find that this asset has potential to pump, but it is pumping in a bearish market or a bearish sentiment market, what you have to do is, if you decide to take the risk to get onto that trade, try to do it as conservatively as possible. Okay? And also, a few things you should note, that when you take a trade when the market bias is bearish and you find a coin that is pumping, be sure to get out of that coin as soon as possible. You get it? Don't be greedy. Why? Because it is going against the general bias or the general sentiment of the market. Look at how much it dumped in the candle that came on Monday. It pumped that high and it dumped by 53%. 2 days later, the coin has dumped by how much? By 88%. Now imagine you are just in fear of missing out. You just jumped on the coin because you're seeing it pumping. People are telling you the market is bearish for you, like Jerry is pumping. These guys don't know. And then you just go ahead and probably you buy from here. Because many times some of us are going to see these coins not before when they happen, but after they pump. Many of us are going to see it on gainers list. Many of us are going to see it on royalty list, because I don't know. A few of us may be keeping watch lists, but if you don't keep a watch list, many of the time you're going to do what? You're going to see this late. So let's say you saw it very late. You saw it maybe at this level. Okay? God forbid you saw it at that level. Okay? And you've looked at how much it has pumped and you're seeing the candle is still pumping. Yeah? And then you come in and you're like, I'm going to do what? I'm going to take this coin. And then you're like, I'm going to target a 15%. Now, imagine you targeted a 15% and your 15% ends here. Now, because this pump is selectively pumping within a bearish market, it is very highly likely that this 15% is not going to get there, and then you set your trade, you go and do your business. By the time you come back, it is way deep. Way deep. Why? It has flipped on you. Okay? It has flipped on you. So, that is why I'm saying, that is what I'm trying to explain to you here, that when a coin, market will always be stronger than the micro sentiment on that single asset. Are we together? General sentiment of the market will always be stronger than the micro sentiment on that single asset. However, in trading, we just look for opportunities and try and get the best opportunity. When you get the opportunity, and the bottom of your mind, that if I'm pumping, I'm buying a coin when Bitcoin is heavily dumping, I should get out of it. Sometimes what is better to do is, when you find this pumping coin, wait for it. Let it get wherever it's going. Don't chase. Okay? Don't chase. Wait for it. When it is done, calm down very well. Go to your 4-hour. Look at it. Like, okay. Have you got there? Yes, I've gotten there. Find an opportunity and short it. Because the short will be smooth. It will be sweet. Why? Because when they pump, for example, in a general sentiment market whereby we're having a bearish sentiment market, and then this coin just comes out of the blue and pumps, it's usually because there are certain investors who have put money on it and they just want to make money very quickly and then get out. When it pumps, it goes high, wait for it and dump with it. You get it? Wait for a good opportunity. Also, do not what? Do not just go for, make your analysis. Okay? Make your analysis, get a very good entry point. For example, on my 1 hour here, when I see this week candle, significant rejection, okay? Trade as conservatively as you can get. All right. So we've gone over that. We've looked at that. A few things that I want to talk about. Okay, index. We are seeing the fear and greed index has risen. Yesterday 20, previous days it was even lower. The recovery here, the fear and greed index bringing us slightly above in 21, is basically explained by BTC recovering to above $100,000. Bitcoin recently, a few days ago, just dipped to 99K. Yeah. And that sell-off was significantly. However, now we are seeing Bitcoin has recovered and regained the 100,000 mark, and it is trading above $100,000. As we can see, BTC is trading at $102,000, which explains the fear and greed index slightly rising. But still, we are still in the fear. Okay, what happens? What does it mean being in the fear? Being in the fear means coins are at discount prices. If you go and look at many of the assets, they are at discount prices. What happens during those times? The big boys buy. The big boys do what? Buy. Now, some of you are maybe worried, is alt season going to come? Is the market going to become bullish again? Blah, 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 blah. Don't worry about that. There is what we call in the market, there is what we call a bear trap in a bullish market. Bear traps have always happened. If we go back into the history of bull markets, we always have those bear traps. What is the essence of bear traps? The essence of bear traps is where the big market players significantly sell off, or they create that shock in the market whereby the retail investors lose their money. Those who have weak hands, we call them weak hands. Those who are not confident in their trades, those who wanted to make money very quickly, they are not here for the long term, they just want to become rich very quickly. In bear traps, there are people who lose money during those times. Why? Because they realize that the market is dumping and they lose hope and they decide to sell. What are they doing? They bought at a very high price and they are selling at a very cheap price. That is a trick that is done by large investors, and it happens. Yeah, I'm telling you about these things so that they don't scare you, they don't shake you out. It happens. We are in what we call a classic bear trap, where we are significantly selling off. Yeah, they are selling off, but when you look at the fundamentals, the market is really, really giving us green signals. And like I said last week, I said that fundamentally, when we look at the economy, quantitative easing is starting on what? On the 1st of December. So I talked about quantitative tightening, and I talked about how it basically influences assets, crypto assets, and other financial instruments or financial market instruments. Yeah, how it affects. So we saw that the US government was in quantitative tightening for the past, I think, 4 years. But now the US government is planning to do quantitative easing. Yeah, and very many other governments have started adding Bitcoin as their reserve asset on their balance sheets. What this tells you is the big monies are buying. They are not here for the short term. They are buying, but they don't buy expensive. They buy cheap. So some of the times they can trigger sell-off events so that the price can go down a bit. And when the price goes down a bit, of course, there are certain people who sell off and stuff, and they get those discount prices. When they get those discount prices, they load. Now, what does that tell us macro, in terms of macroeconomics and the macro sentiment of the market? The macro sentiment of the market is bullish. Yeah, it is bullish, and it is very likely going to be one of the biggest bull markets that we are going to witness in the entire crypto space. Why? One of the biggest reasons is this time round, we are having macro investors, that is the big guys, institutions are coming in heavy to buy as much Bitcoin as possible. Why? Because when crypto regulations is clarified across different nations, crypto is going to become more and more available to very many people. It is going to be very easy to the daily person, whereby even if they are not trading, they have to use crypto here or there. It will become a standard of payment. USDT, whereby you can pay USDT for formal payments, things like paying taxes, paying for shipments, trading, like buying stuff abroad and stuff. It basically will be legalized. Governments and banks are trying to look into how they can incorporate crypto payments, whereby if you want to send money across, you don't have to go through the SWIFT system. You basically use crypto settlements, whereby crypto settlements are way much faster than the traditional ways that banks are settling payments in cross-border payments. That by cross-border payments, I'm meaning that I am in this country and I want to send money to the other country. Currently, today in the current system, you need to wait 2 to 3 business days for some settlements to happen. Of course, there are other much faster ways, but they are more expensive. But crypto and blockchain technology is one of the technologies that have simplified something like that. Yeah, whereby you can have settlements in literally seconds of a lot of money, in literally seconds. So as crypto is being embraced and as governments are looking into this, you can see that the United States of America is rushing to be sure they are the first to implement these things. When finally United States implements some of the most significant laws about crypto and regulations about crypto, governments across the world are going to be rushing to just to own some Bitcoin. So what happens? Institutions are going to be rushing, and we have seen that for the past 3 to 4 months. Institutions have been stacking on crypto, stacking on Bitcoin, stacking on Ethereum, right? They are buying and they are taking that crypto off of the exchanges and they are keeping that in their in their cold storages. So what does that tell us fundamentally? Fundamentally, it tells us that the big guys have come into the market and they have come here to stay. What does that tell us? That tells us of a bullish move that is about to break out. But when they are to buy, when they want to buy more, they're not going to buy expensive. They're going to buy expensive. They have those they will do some of those things whereby they can affect the market. They have the biggest influence. They can affect the market. They can decide to sell off and then they buy tomorrow. Okay, so when they sell, some of you retail traders, or me and you as retail traders, we panic and we sell off to what? We sell off to them and they buy expensive. And now when finally the switch is turned on, quantitative easing is in, liquidity flows into the market, retail investors get money, they can now invest in risky assets. We are basically seeing what? A significant bullish breakout. Very, very bullish breakout. So what am I trying to tell you here? What I'm trying to tell you here in terms of macro market dynamics, we are still very, very bullish. So what you can use this time for now, this is actually a tip. You can use this time when the market is slow to learn as much as possible. Learn as much as possible, as much as you can about risk management. Learn as much as you can about trade analysis. Yeah, learn as much as you can about capital management. Why? Because when the market finally switches and it goes bullish, many of us become emotional. Money comes even without you analyzing. You just find a random coin, you place your trade, it pays you. Okay, during that time is when most of people actually lose money. Why? Because they don't think, they don't follow risk management, they don't know how to do it. Why? They are excited and euphoric. In such times, people make a lot of money, but also people lose a lot of money. How are you going to avoid that? Is to learn. So you can utilize this time as trades are coming in slowly, optimize to learn and understand as much as possible as regards to market analysis, learn as much as possible as regards to capital management. Also, you can increase your capital, but don't waste that capital on small plays in a sluggish market. You get it? When you're trading this market, sluggish market, it's slow, it's not moving, it's either going up or down, trade slowly, make small profit, learn discipline, compound, things like that. Try to train yourself in those areas so that when the market finally turns green and everything is working out, you do your analysis, it plays out, you know a lot about how to carry out your own trades. Okay. I think that tip goes till what the market is still significantly giving us a bearish sentiment. However, we are seeing I want to look at Ethereum. Let's take a look at Ethereum. Let's bring OKX here. So significantly is not any different BTC. Ethereum, on the other hand, has broken its demand level compared to BTC. BTC held its demand level, but Ethereum has broken it. Okay, so let us look at Ethereum here, and it is understandable if BTC has held it and it is fitted within its demand level. What do you expect other coins to do? What do you expect them to do? Yeah, BTC has shown very, very significant selling pressure on my demand. Let me first pull it back. First correct it. I hope we all understand how to draw demand. Let's correct it. And then we expand it again. Take it back. Okay. So we see the demand level here. Ethereum managed in the recent drop on October 10th, the liquidation event. Ethereum significantly came and tapped this level and bounced back. We can see Ethereum and Bitcoin are what we call what's that trading term that we use? Getting it. Getting the trading term. Let's make it again. Let's just do that. Okay, so we see Ethereum literally went through a ranging box similar to what Bitcoin went through, and then it broke out at the same day. BTC broke out, and when it broke out, it significantly slashed through the demand level. Very, very much. But we are seeing rejection candles and some sort of recovery on Ethereum. Now, when we go back and we look at the area where Ethereum is kind of, bouncing from, we can try and see that the next area of demand that I can consider would be around this area. Okay. Around that area. And let's just correct this. Do that and do that. So when you come down here, we see Ethereum is bouncing off of our other demand level that is happening at this area. Okay. So when we get down to where Ethereum has gotten, so this is the overall chart. This is what it looked like. Ethereum recently pumped from this level and it went high. I remember making significant amounts of money from this move. But then we have now seen Ethereum got to the top, it ranged a bit, and then it started breaking down in a bearish formation. Okay, and that is what we are seeing. Ethereum is significantly bearish. Okay, significantly bearish. Now, if we were to draw out our resistance trend line, it would basically look like this on Ethereum. From the most recent high that it established, yep, there we go. Just a moment. Where's my Ethereum? What has happened? Undo. All right. So when we draw our trend line, our resistance trend line on this downward trend on Ethereum, what we see is Ethereum has sustained a significant downward move. One of the things we want to see in confirmation of Ethereum turning bullish is when Ethereum finally comes and crosses above our trend line here. Okay, there are very many ways to confirm a bullish move or a turn or a shift in the market or a change in the market. But one of those is if Ethereum comes and trades above this and continues. Or we can also confirm by market structure where we see our change of character would happen at this level. If we were to look out for a change of character, we want to see the market trading above 39,000. So when Ethereum finally trades above 39,000, that is a significant symbol that Ethereum has finally changed character, or it is starting to gain some bullish momentum. Continuous higher highs and higher lows basically will give us stronger confirmation that the market has significantly turned bullish. Otherwise, as we see, as it stands at the moment, it is in a bearish trend. Okay, it's in a bearish trend. Now, when we go back, if Ethereum broke below this level, which is our demand, we can go back down here and try and find the other level where Ethereum might try to take a pause, and that would be around there. Okay, now if Ethereum broke the level that it is at, this is the next level that we expect. Why is it important to label these out? For example, if you're trading short, this work for you as targets. Yeah, they work as targets. You can short the market between those levels. Yeah. So this is the next level we expect Ethereum to kind of bounce from if it breaks, if at all it breaks this level. That is, if it comes on this trend line, it bounces off of it and it continues downwards. If it does not break it and go upwards, if it comes, bounces off, continues downwards, our next target or area of Ethereum reacting from would be here. That means if you wanted to take a short, you would confirm with market analysis and then target the direction, the market to that level, something like that. The way I'm doing this is the way you can do it on any other asset. Okay, on any other asset, as long as you determine. I'm only on the daily time frame because I want us to look at general over big pictures in the market. But for your trading, you're going to do the same kind of analysis on, for example, the 4 hour or the 1 hour, and you'll be able to find your trades. Okay, so as we see, you see demand levels are very, very strong areas in the market. The market usually bounces off of those levels. They are usually respected in the market. On a few occasions, it's rare on a few occasions where you find that these levels are not respected. Yeah, because there is one here, but it was slashed through by this. But also, if you look very closely, it was respected here. The market bounced off from there. I don't know whether you're seeing it. There is one that is lying around this area. It cuts from here, goes like that. When you see this market, basically it bounced and then it pumped hard because this fake move kind of slashed through it, but still this demand level was respected where it got a lot of momentum, which pushed it high. And then when you continue, that demand level was still respected on this. It was respected literally 4 times before the price finally broke below. So these demand levels are some of the good price action concepts that can help you tell where the market is living. It can also be supply. Yeah. Now in a downtrending market, we usually want to look for supply. Yeah. In a downtrending market, for example, for Ethereum in this case, we have our supply here. One of the expectations is Ethereum will pump. If you confirm pumping market momentum, you can pump it, you can buy and go with it, or you can do this on any other asset that you are analyzing. This is our supply on Ethereum. Let's just do this. So is a significant supply on Ethereum. So if the market pumps, for example, if it pumps and breaks through this area, we wait for the reaction on this supply level. If the supply level is still taken out, then we can confirm, we can have our first confirmation of bullish signs or bullish strength in Ethereum, technically. Otherwise, it can break this line and then gets trapped in this area, and then it comes back and dump. So it is important to understand. What I just described is what we call a fake out. Okay. For example, Ethereum can pump from here, and it fails to bounce off of this to come down. Yeah. And it literally just does what? And it literally just, let's draw this again. It can pump from here. Let's say it comes, does this, and then breaks out. So when it breaks out of our trend line, you need to watch the supply level. Those are very strong areas. We call them key levels. Very strong areas which could cause significant selling pressure. Now, if it reacts from that level, one thing that you want to see, you want it to come and maybe bounce off of this and then go back. But if it fails, if it reacts from this level and it fails and it breaks this again, then you just got yourself saved from a fake out. Because when it sells from there, it can sell significantly, whereby it can come as low as that. Why am I talking about if? Because the market is not very, very, very sure. At the moment, there is not a lot of information that we can base on to say this is really what is going to happen in the market. At the time, we're having a neutral market, literally slightly bearish market, and tending to the neutral side. So we are not, you cannot be like 100% sure this is what the market is going to do. You can only look for opportunities and prepare yourself. If the market does this, this is what I do. If the market does that, this is what I do. There are times when you are sure of the market. You're very confident. This is what is going to happen in the market. Okay. So as you can see, the market reacted from that level, but also after having realized that there is a demand level here, the market literally came and when it dumped, it reacted from this level and it bounced straight back up. Okay, so we are seeing significant rejections here, which is a very, very strong signal that the market is rejecting areas or prices below that level. If we were to draw our support, we would draw it around there. Okay, we will draw our support around there. So basically it means the market has rejected this 4 days consecutively. If we see continuous bullish momentum, because it's not that strong, but if we see the continuous bullish momentum, we're going to see a recovery in these assets, in the assets across the market. Now, even if you don't trade Ethereum, even if you don't trade BTC, if you do your analysis and you see that it is holding, it has been in a downtrend and it's starting to hold, it is starting to recover, you can go to whichever asset that you're trading and you're going to be confident that when I buy or when I long this coin, Masav, right? So yeah, and I also take the opportunity to share this with you because I believe it is also important information that we can do it, we can learn. So Ethereum, I don't want Ethereum to break below 3K. I really don't want it to go below 2,900 because when Ethereum goes below that level, we might see some significant selling pressure across the entire market. Okay, now as long as Ethereum holds this position and goes back up, we are good. The market is basically going to be performing awesomely. So today I've been very, very slow and I've tried to explain a lot about what we are seeing on the chart technically and sentimentally what we expect of the market. We don't have a lot of fundamentals, and maybe the other thing that could be affecting the market is the fact that the government shut down. The U.S. government shut down. Now, during such a time, the U.S. government shutting down has also caused a lot of uncertainty in the market. Now, when there is uncertainty, we cannot see a lot of significant moves in the market. You see, BNB has also got below $1,000. Solana is as below as $150. But the Solana has dumped a lot. This market sell off. Solana has dumped a lot. Those of us who want to buy Solana for holding, Solana is at very, very good discount. You see, Solana just returned to one of the significant levels here, and it is reacting from that area. Yeah. Now there are two areas that are important on Solana. There is this area where Solana is seated at the moment. It is a good area. I would like to see Solana recover from that area. Let's turn this bullish. Yeah. Solana is seated at a very, very good discount level. If Solana breaks that level, the next level is significantly here. It's a good key level. The next key level is around that area. Okay, you may call this you may call it support levels. These are key support levels on the higher time frame. If you realize I'm only doing this analysis on the daily, so we can see the bigger picture. Okay, so we see the market was bullish, but then the market significantly went bearish. If we were to draw our trend line here on Solana, because this is not what it would look like. Let me correct it. It would pretty much look like that. And that proves you that we are in a significant strong downtrend. Solana, as similarly to Bitcoin and Ethereum, Solana ranged and then it broke below its range and it's seated at its significant key level. This level is basically a buying level. Now, we need Solana to hold this point. We don't want Solana to break below $150. If Solana broke below $150, the market, it's a symbol or a significant area to note that the market is going to have some good selling momentum. Okay, so if Solana broke below that level, of course, our next level of interest would be 136, the 130 point, yeah, between $130 would be our next level of interest. If I was to draw a demand area on that level, this is what our significant demand level would look like. It would take this and also take that. So that is what our demand area would look like. So the next point of interest would be between 137 and 125. So it is basically the 130 mark. That's the next level we want Solana to be seated at. So if Solana breaks below there, of course, the next very, very good buying area would be 130. But I do not want it to break. I don't expect it to break. But we do not trade what we expect. We trade what we see. So when we look at Solana here, we have a significant supply area. Okay, this is a supply area, as you can see. Supply area. Stand is bearish. Yeah, so we have a significant supply area. So for my trading, if I was to consider trading, of course it is seated within a key level, a key support level. I would expect Solana to come down here and then maybe continue downwards in its bearish formation. Otherwise, if Solana goes bullish, that is if fundamentals recover, we want to see maybe Solana bounce a bit, tap here and then continue in the upward direction. So there are literally two scenarios. We expect it come here, find some selling momentum, bounce off of our trend line, continue in the upward direction. Or if we do not get anything significant to recover the market, expect Solana to come down here, come back here and go down. So what I have done is literally the big assets, some of the assets that influence the market prices. This is not going to be the same analysis that is going to happen on all the assets, especially some of those that we trade. Yeah, especially some of those we trade. Some of them are literally going to take on different price action. But for those other assets, let me see. Let me choose. What can I go with here? Can I go with here? Let's look at Parachain. What does it look like? So what we are seeing, many of the assets are breaking their have either tapped into their key support levels and they are breaking below them. That tells us of the strength of the bearish momentum. Just before I forget, I wanted to talk about this. Now, there is what we call narratives. Okay, there is what we call narratives. Now, many of you have seen, for example, which coin? There is Zcash. We've seen coins like Zcash. Now, sometimes we have narratives. Now, you look at this coin. This coin falls into the narrative that is happening, and it is literally going on. Okay, the narrative that is trending at the moment. The narrative that is trending at the moment is privacy coins. You find any privacy coin anywhere, it is the trending narrative. Now, even regardless of the market sentiment, because the market is bearish, but narratives like privacy coins have been pumping. Now, what do you do when you understand the narrative of the season? When you understand the narrative of the season, you can take a very good advantage of that narrative and you can make very, very good money. Personally, I traded this coin from as below as this. You get it? Now, when I did this analysis, it was around August. Analyzed here, first targeted the 50%, came back, reanalyzed, and I bought and I held on spot. Why? Because I started to see strength in what? In the narrative. Now, when it pumped here, I realized, oh, it very, very likely might be continuing. Yeah. And significantly, the coin showed strength. It bounced off of the 61.8 Fibonacci, and the coin has just been pumping, regardless of what is happening in the market. Why? Because it is the trending narrative. Okay, is the trending narrative. Now, let me let's see. Let's use Grok. Let's use Grok. Let me show you some of the trending coins in the narrative. Privacy coins narrative.
I think Dash is also among them, not so?
Dash.
Yes.
Yes, it is. Yes, it is. But Dash is a privacy coin. It's a privacy coin. These people are not giving me examples. Monero, there is Monero, there is Dash, there is a secret coin, there is give examples of privacy coins. So there is Monero, there is Zcash, there is Dash, and most of us I've seen people who have been trading Dash. This one is not so common. That one is not so common. Rave, but there is Secret. Now, for those of you, I want you to give attention to this coin. This coin hasn't moved yet. Secret, there is, I don't know this one. I'm not sure about that one. Beams, this coin. Let's go to CoinMarketCap and look at some of these coins.
Which website?
Sorry?
Where are you getting that? Where are you getting that information from?
I just put in an AI. I didn't really do anything much. I just put in an AI. Yeah. I just went to AI. Let's put privacy. Okay. So apply.
That looks like it's under monitoring.
What Secret?
Zek.
Zcash. Of course, Binance put it on monitoring. Binance doesn't like. Binance doesn't.
Royal Keys and
that is Binance. So Binance doesn't. Binance has a tendency. It doesn't like pumping coins. it believes that when a coin pumps like that, it is going to dump on people. And Binance wants to protect the investors, to protect its name. It's the biggest exchange. So it has to protect its name. It has to protect its investors. There are certain rules that a coin does not have to go through. And they have their politics as well. I mean, Trump coin pumped, but they didn't put it on monitoring. Zcash is pumping, and they are putting it on monitoring. But Zcash is a strong coin. Even if Binance delisted it, you just follow it. You go with it to maybe Bybit or which other exchange is that? There is that exchange that Kochamaradi uses. You can go with it on another exchange. Yeah, these are some significant. HTX, yeah, HTX is a very good exchange. You can just go with it elsewhere if Binance finally delists it, because it really doesn't have issues. Zcash, it's Binance delisted Monero, and Monero has literally no problem. A few years ago, Binance delisted Monero. Monero is one of the first privacy assets or coins that we saw in the early days of the market. What are privacy coins? For the person who does not understand the privacy coin narrative, privacy coins, you see how I know how much Bitcoin Binance has, and I can find out. I can see when Binance sells its Bitcoin. When I go to the blockchain, I can look at Binance's wallet, and I can see when it has sold and when it has bought. I can see how much coins the government of the United States of America has. That is blockchain. Now, some of you have not heard of that or do not know that happens. Blockchain technology is transparent. You can literally tell, you can see. I can know very well how much crypto assets the government of El Salvador holds at the moment. And I will be able to know the wallet that they hold it in. El Salvador, BTC wallet. I can literally go to the blockchain explorer and I'll be able to look at how much money El Salvador as a government holds. And if I want, I can even go and find their wallet. I will know when they sell, I will know when they buy, because that is the blockchain technology. It is transparent. Okay. Now, these are the recent transactions that this wallet has been doing. The recent transactions that have been happening on that wallet. This is for the government of El Salvador. Now, if I wanted to search anything, I can come and search BlackRock, for example. BlackRock. I can see how much money BlackRock. Now, this is what I was telling you, that I can tell when BlackRock sells and when they buy, and I can tell the quantity that they have bought and what they have sold. Now, BlackRock is one of the big guys, the ones who invest in ETFs, and you can see BlackRock has been selling pressure. Today alone, 5 hours ago, you can see it has just been selling aggressively. 30 million. So that explains what I showed you earlier about ETFs. ETFs being what? ETFs selling off in the market. So BlackRock is one of the big guys who invest in the crypto market, and when they take action, they influence the market prices. BlackRock, among others, we have Strategy. This is MicroStrategy. Some of you who know it, Strategy, MicroStrategy. MicroStrategy, on the other hand, sells and buys, things like that. So I can know how much they have in their wallet. They have 49 billion. That is how much their Bitcoin is worth. They hold 400,000 BTC in their wallet. At the price of $100,000, it is valued 49. Is it 49 billion? This is 300 million. This is billion. Yes, 49 billion. And when BlackRock makes money, for example, if Bitcoin rises to 120,000, this money is going to multiply. It is going to increase. I will come back here and I'll see, oh, BlackRock is in profit. It is in profit of how much? This amount. I can look for US government. US government. It is there. I can look for US government and I will know US government holds assets worth 34 billion in crypto. And I can tell when the US government has increased on their holdings or when they have reduced. Because on the blockchain, everything is transparent. You will be able to see everything. I can see Changpeng Zhao, the owner of Binance, how much they hold. As long as they have declared it, of course they can hold what they have not declared. The declared wallets show us that he has 112 billion. That is the declared. He has more that are not declared. I can look at literally what Binance is holding, the exchange. Okay, we're going to see what Binance is holding as an exchange, and you're going to see the biggest figure in crypto. You're going to see the biggest figure in crypto. Of course, Binance transacts always. It transacts for people. And you see, Binance holds 213 billion US dollars in cryptocurrency. 213 billion US dollars in cryptocurrency is the biggest exchange, the biggest amount of crypto holdings, literally. Yeah. And you can see how much of that is in Bitcoin, how much is in USDT, how much is BNB, Ethereum. You can literally see here. Ethereum 3 million, BNB 39 million, USDT 45 million. 45 million. No, sorry, the value is Solana is 3 billion, USDC Web ETH is 11 billion, Ethereum 13 billion, BNB 38 billion, USDT 45 billion, BTC 62 billion. Yeah, I can literally tell what is happening in the wallets of these big guys. That is the blockchain. Now, this one makes people to be able to be tracked, especially those who don't want to be tracked. Because I can know, anyone can know, even you. You can what? You can know. So a lot of investors, since crypto regulation is going on and they are starting to scrutinize and put laws and taxes on Bitcoin. Because when you have crypto, they are taxing you. And those are going to be general. In the next 5-10 years, we are all going to be taxed for having Bitcoin. Governments have to find a way of earning from this thing. That is why I tell people, when you're making your money in crypto, make sure you learn and you get past mistakes. Because when we are all learning, we get through a lot of mistakes. But try to learn as quick as possible so that you can make some money. By the time they start taxing you, you've eaten your crypto money. You've done whatever you want to do. Can I tell you the truth here? If I wanted to withdraw 500 million Ugandan shillings from my crypto wallet, I'm not going to get a tax. The only thing I'm going to pay are the transaction fees from the guy who is selling me the cash and that I am giving the Bitcoin. And that is all. But wait, when they put a tax on us, you'll find that for you to be able to withdraw 500 million, you're going to have to pay a tax of 15% because you have no. You get it? So that means you pay a tax of, I'm just giving an example, it's going to be 15% or what, but let's say they've put a tax on you of 15% of 500 million. And then the charges for withdrawing, let's say 10%, just to withdraw that money and turn it into cash. So that means off of your 500 million, 25% is not your money. You get it? By the time you complete the withdrawal of 500 million, you only have 75% worth of what you had before you withdrew that money. So taxation is coming, yes, that one is very sure, and that is where we're leading to. Because for the crypto market to grow, for Bitcoin to get to 300,000, 700,000, regulation has to be in place. You get it? So taxation might take some time. It might be in US, but it might take some time for our countries to finally implement. What does that mean? You have a gap, an area of about 5 years, 7 years before this really locks in, and we are really, really required to pay taxes on our crypto. So in that gap of 5 to 7 years, try as much as possible, especially if you want this, if you want to make money from this, try as much as possible to optimize and make some money. Take it wherever you want to invest. Do whatever you want to do with that money before they get to us and they are taxing us heavy on our crypto. Now, because of that, you can track what Binance is holding. Very many private investors recently have decided to go to what we call the privacy coins. Now, the case for privacy coins, you cannot track. I cannot track where this investor had. Now, let me show you something here. Let me show you something on Binance. I can tell if Binance sends a Bitcoin to me. These guys are not giving me. Okay, I'm not going to show it. But I can tell where a Bitcoin comes and it goes. So if Bitcoin started from Kochemar, it came to me, it went to Sharifa, it went to John, it went like on the blockchain. I can literally see that. I can follow a Bitcoin from where it came from to where it went. That is why when hackers hack, they can block those assets and they lock them because they have labeled them moving on the blockchain. As long as they've identified that this is the one, yes, they can literally track them. Now, on privacy coins, that is not possible. You cannot tell in a privacy coin that someone entered with this money and now it is gone to the other address and now it is gone to the other one. You cannot tell how much I have if I do not decide to show. If I choose not to show using a privacy coin, you will not be able to tell how much I have. The way you've seen it in other coins like Bitcoin and Ethereum, which are public blockchains. Now that is why we have seen the pump in privacy coins. A lot of investors have decided to go and buy and hold the privacy coins. In other words, they are trying to hide away from the snooping eyes, and that is why this narrative has been gaining significantly recently. Everything is bearish. Zcash is showing you, it is giving you green candles. We can look at Dash. Dash as well is doing very good in that area. We can see Dash has also. Whenever you see a chart and it makes the previous price action like a single line, it's like a string. You just know that that coin has pumped. When you look at previous price action, it looks like a string. It is not significant because price action should look like this. it should be able to see candles and structure like this. But when you come and open a chart and it is a string like this, just know that coin has pumped a lot. It has pumped. So we can see Dash has also gained significantly. Now, my warning is don't be fast to try and short these things because they are high. The narrative is now favoring them at the moment. What you can do is just wait for significant strength and continue with the upward direction of the market. Don't try and don't go shorting them. Don't go shorting them because they might disappoint you. The narrative is on them. Okay, we've seen Dash, we've seen Zcash. These ones are still. I don't know about this coin. Unevolved, proof of work, security, privacy, and scalability. Anyway, I don't know about this one, but I know about this one. ZK has also been. If you look at its performance in the past 7 days, 100%. So it means it hasn't moved that much. But those are some of the coins that you can try and look at. I don't know if these ones are available on RioQ. But I can see ZK is available on Binance for spot trading. You can look at I don't know about DCR, but we can check it. DCR is available on Binance for spot trading. By it being available on Binance, I would expect that it is listed on RioQ as well. DCR is available, and Dash is obviously there. XMR is not. LTC, I don't know why LTC came in this category, but yes, Zcash is also there. The one that I was talking about, I think it's not available on Binance. Secret. I don't know. I think it's not available on Binance. Let's check and see. Oh, it is. It's available on Binance.
It's there even on Roche, it is there.
So this one is the one that hasn't moved a lot. And I am eyeing this one. Let us give it some attention. It might give us some very, very good money. We can see in the past 7 days, it has given us 100%. That is in a week. It has gained 100% of its value. And in the past 24 hours, it has given us a 36%. If we come here, Secret. So after trading some of the other ones, I'm looking at Secret Network for another Banangi. It is high, but if I look at the general overview, it is significantly still trading in very, very low prices compared to its value previously. Okay, when we look at its previous high on the weekly, I can try and draw our resistance here. It is at $0.7. Being at $0.7, this coin has recently just taken out this level. Okay, this liquidity level. Let me make this smaller. This coin has just recently taken out. It's aiming. It has not yet taken it out. It's aiming for this liquidity level, and we can see this week alone it has gained. The chart is showing me 62%. So it is aiming for that liquidity level, a distance of about 3%. Of course, you don't want to enter a coin which is in premium prices except you confirmed continuation. So what do we want? We want it to come, take out this level, and show us strength, because this can work as our what? As our point of reversal for the market to go down. So we want the coin to at least come and clear the 0.3 level. Now, if it clears the 0.3 level and it continues, it shows us strength, continuation in the upside, we can very confidently try and target the next significant levels, because that's the narrative of privacy coins is still ongoing. So basically it means that if it takes out that level, we have a profit range of about 70%. Yeah, and this coin has the potential to cover that because its other coins within the same narrative have already been pumping. So this one, which is under the same narrative, can still cover. So if you have a profit range of 79%, no one has told you to take 79. Just come and confirm your trades and try to follow with the trend. You can probably, when it enters this zone, that is 0.3, and we can target 0.5 as a long-term target. So that is on the weekly. When we come on the daily, what do we see? On the daily, of course, you can see the profit targets that you can try and aim for. But at the moment, it is not good to try and get into this coin. We want to see it take out the 0.3 mark. Yeah, so we are just going to wait for it. If it gets to 0.3 and it crosses above and it continues, then we can trade in the upward direction. Otherwise, I said, don't be so quick to short them. Even if it comes and rejects this 0.3 level and it rejects, consider it a retracement or a possible area where the market can bounce off of from. So you can label out maybe some of the significant key levels. What are they here? Like support and resistance. So you can label out your resistance areas. It could maybe drop to a resistance area and it continues. Yeah. Or we can use a Fibonacci when the market has finally given us a high. We can't use Fibonacci here because the market hasn't given us a high. We are still on the current candle on this leg up. So when it completes and it gives us this, we can use Fibonacci and maybe use a retracement. How are we going to be able to do that? For example, if this is the current high, but we can't use it on a candle that is still printing. We need to wait for that candle to close and maybe see considerable retracement. So we can use Fibonacci if this candle closes and it gives us a high. Whichever high we get, retracement could come either to the 0.2, because pumping coins don't usually retrace that much. They have shallow retracements. It could come maybe to 0.2, it could come as deep as 0.38, or it can come up to 50%, or even 61%. But always make sure you have a certain fundamental, always make sure that you have a certain strategy that you follow to get your entries. So on this coin, that is what I can see on the daily. On lower time frames, of course, when you go to lower time frames, you can get clearer pictures. For example, now we have a resistance here which was taken out. If you're looking for a retracement, you can come and see. If it bounces off of this area, then it is a good opportunity for you to try and take a long trade. So there is going to be some waiting on, for example, this coin. Significant 20%, which can be taken. Yeah, so let us give it a wait, see what it's doing. But I have faith in it. I have some good money. I'm basically eyeing at this profit range of 7 to 80% here. That is when it trades above the $0.3 mark. So great. So I just wanted to put that out there, that this is a narrative that has been gaining significantly for the past days. It is the trending narrative. All right, guys, I believe we have pretty much pushed through for this session. I did not get any questions. Juliana said at the start, I don't know whether she's still here, but she said, in case I use cycle in trading, how do I set a stop limit in case the coin pumps so the robot doesn't buy when the prices are high? I don't know whether Juliana is still here, but in cycle there is what we call the upper limit and the lower limit. Juliana is here. Okay, so Juliana, what you're going to do in cycle trading, let me say I want to trade Secret. Let's go here, SCRT. So if I wanted to trade Secret and I want to trade it on cycle, I understand. I'm going to come and I will come to trade settings. I will choose my strategy. Say I'm choosing this strategy, and I'll set my settings as I say. Now when I come down here, I will choose strategy period to cycle. Now when you turn on cycle, there is this part. You always have to scroll down. Let me just do it again so that I don't leave you behind. When you choose, you place your settings very well, everything. Yeah, let's say you want to have maybe 4 margin calls. You set your margin configuration and you're comfortable with what you're seeing here, everything you've set here. Okay. Now, when you are comfortable with everything, you've set, of course, whole position take profit, calling, buying callback. I know you know these settings, so I'm going to go very, very quick. So what we are going to do, we are going to come here, advanced settings, and then scroll down. You're going to set your strategy period to cycle, and then continue scrolling down. Okay. Now there is this part. Juliana, your question is answered by this part. It's called the price range. So your closing order will be here. For example, if I set to trade secret, where are my marks? Disappeared. Okay, let's say I set it on cycle and I want it to stop at $0.5. I don't want it to reach 0.54. I want it to stop at $0.5. That is, the bot should stop at $0.5. I come in and I put it here. It goes under the highest the highest limit. Now, if I have a price I don't want the bot to buy below, for example, $0.3. Yeah. If I don't want the bot to buy below $0.3, I want to trade within this range and I want to trade it on cycle. $0.3, I'm going to come and I'm going to place my lowest as 0.3. That is important. Yeah. Now these are optional. First drop, position drop, cooling off period. These are optional. That basically means if the bot sells for you, how long do you want it to wait? What condition does it have to follow before it enters another trade? When you don't set them, it means when the bot sells, immediately it buys. When it sells, it immediately buys. But when you set them, for example, cooling off period of 30 seconds, it will wait for 30 seconds before it places another buy order, something like that. So you can leave this out for now, but your question is answered by this. For the upper limit, you don't want the bot to buy above that limit, or you don't want the bot to buy below that limit. You have to go and make sure that you've analyzed the market, you know these areas and their key levels, and you come and set them. Now, when you do that, go ahead and save. Okay, go ahead and save. So I believe that answers your question, Juliana. Thank you for asking. And said, how do I set a stop limit in case a coin pumps so that the bot doesn't buy when the prices are high? I think that is it in cycle. Yeah, that is it in cycle. That's how you go about it. There is this app you were using to track wallets. I saw Akam name on it. I think, which one is it? I need it. It's Akam. It's a website. Just go to Google and search Akam. You've typed it very well, Akam, and you can create an account there. You can create an account there. It's Akam. I don't know, when we get time, maybe in the future we can talk about it, or in another session, not this session. We can talk about this. Is basically, it falls under on-chain analysis, on-chain data analysis. This is what I wanted to show you last time, that when Binance sends crypto to a certain wallet, I can see it. You see that? Binance sent crypto to Pancake, Binance sent this to Mev. I can also see the wallets that sent into Binance's wallet. This is what I wanted to show. This one. So the different, this one. So the different transactions are literally public. That is why you can't say Binance stole my money. Or you can't, and in the long term, whereby in the short term, we're expecting, we are still seeing bearish tendencies, but in the long term, we still expect the market to go bullish. We've also seen the narrative that is trending that you can try and look at to try and make some money. And then we've also seen how we can analyze generally and be able to tell the sentiment of the market. We shall continue doing this again and again until we are able to learn it and do it on our own. Otherwise, I encourage you guys to always come with your questions. Come with your questions, because when you come with your questions, you can get specific answers and you will be answered directly, which is beneficial. Otherwise, when you don't, sometimes you always see something new, which sometimes it's not what you need. Sometimes you want to get an answer from what you've learned. All right, thank you and have a beautiful weekend. Safe trading.